Now, in the meantime, the National Insurance Commission has stated that no underwriting company should sell the products through the banks and other financial institutions. The Commissioner for Insurance, Mr. Mohammed Kari, says that the Commission had been in discussion with the Apex Bank on what is known as a bancassurance distribution channel for some time now. Now, bancassurance means selling insurance products through bank networks. Mr. Kari added that last week, the central bank asserted that NICOM was not in a position to license banks, and thus it could not go ahead with the arrangements for now. The Commissioner also stated that the NICOM would continue to engage the central bank until all the grey areas are resolved. But while the Central Bank of Nigeria and the Bankers Committee on Tuesday resolved to raise the volume of foreign exchange sold to bureau de change operators from $30,000 to $50,000 every week. Now, briefing journalists after the Bankers Committee meeting at the CBN headquarters in Abuja, the Acting Director, Corporate Communications of the Central Bank, Mr. Isaac Okoroafo, says that the increase is to provide enough foreign exchange in the country for people who have need of it. Now, let's listen to some of the comments made at that meeting.
The committee has decided that with CBN to raise the volume of cash sold to BDCs to 50,000, like the maximum of $50,000. The essence, the reason that underpins this decision is to ensure that, especially now that people are going back to school, to ensure that people get enough for school fees, student maintenance allowance, and of course for PTA and BTA. And it was also emphasized that any BDC that tries to circumvent this gesture will be severely punished. It is not a policy reversal. During an economic crisis, policymakers must begin to watch policies and instruments and must be able to change or tweak them. But from observation of the dynamics of the crisis, we are in a period of dollar crisis, foreign exchange crisis, and that is precisely what we are doing. Unless you want to say that increasing sales to BDCs to ease people's challenges is a policy reversal. It's not. It's actually a policy improvement.
Issues came up about lending and how lending can be done to support the economic condition as we have it today, to support it with low interest lending or single digit lending. So as you may be aware, some time ago, the central bank took from the bank's cash reserves a special sum of money, which we call the Special Intervention Fund. That fund has been with the central bank for some time. It hasn't been disbursed. But there was some discussion around it, and the decision or the agreement was that those funds would be disbursed to support primary agricultural projects, core manufacturing, and core manufacturing in the sense that it must be projects that support import substitution, projects that will help preserve foreign exchange such that whatever we were importing before can be manufactured here. So once those funds are, so it will only be released to those kind of projects. They're not going to be released to any kind of project. It has to be those kind of projects.
Now let's get some perspectives to this development. I'm being joined by Omotola Abimbola, investment analyst with Afrinvest, as to talk to us about how this decision would impact on the Naira. Thank you so much, Omotola, for your time with us on the show.
My pleasure, Bolaji. Good morning.
Good morning. What do you make of this decision to increase the weekly sale of Forex to BDCs from $30,000 to $50,000?
Okay, thank you. I guess the thinking of the central bank is that there is a need to narrow the gap between the parallel rate and what we have in the interbank market. And so by trying to increase the supply of foreign exchange to that segment of the market, maybe that might be enough to narrow the gap because about 1 month ago, when the central bank introduced the flexible FX regime, the strategy was by doing that, they could probably narrow the gap between the parallel markets and the official rate. But unfortunately, the gap has still remained very wide, although it has narrowed from nearly 200 naira to below 100 naira now. But regarding your question as to whether this will be enough to narrow the gap in a sustainable manner, we do not think so yet. We think there are fundamental issues that are affecting the pricing of the currency at both segments of the market, and if these fundamental issues are not solved, then we might not see the narrowing of the gap between the parallel rates and the official rates. One of those issues is regarding the confidence crisis in the economy at the moment. For foreign investors who want to bring portfolio capital or direct capital to the country, they are worried that there still remains a gap between the parallel market rate and the official market rates. And then, unfortunately as well, there seems to be a lack of faith in policy making in the country at the moment. So if the policymakers, both at the fiscal and monetary end, if they could coordinate together to ensure that they can harmonize their policy and ensure that investors, of course, have faith in the policies they are making, maybe that might be enough to start attracting this much more needed foreign capital inflows into the country. So and then the second thing is consistency in policy making. Over the past 1 or 2 years, we have seen the policymakers at the monetary end going back and forth on some of their policies. So, of course, this is not reinforcing confidence in the economy. And for foreign investors, they want to see the central bank staying its course on this recent policy action to liberalize the foreign exchange markets.
Now, the central bank's acting director, corporate communications, was saying that this is not an issue of policy reversal or somersault. And you mentioned that the fundamental of confidence in the macroeconomy is key to the revival of the value of the naira. But do you think that this will in any way affect how much we will trade the naira to other foreign currencies in the short to medium term?
Well, to be quite honest with you, I do not think it will significantly alter the current trading band of the naira. We shouldn't see an appreciation in the value of the currency in the near term based on this policy alone. Okay. What's going to lead to the naira to appreciate in the foreign exchange market goes beyond the policy of trying to increase dollar supply to BDCs by $20,000 alone. That's very, very minute compared to the huge demand for FX in the economy right now. What we need is the return of autonomous capital into the foreign exchange markets, not the CBN trying to supply dollars to the BDCs again. And these autonomous capital inflows aren't going to come unless we coordinate our policy action in the country efficiently. So I think this is what the policymakers should be focusing on at the moment.
In other words, you're saying that this decision to increase forex sales to BDCs will not in any way ease the pressure on the demand for the naira? It's of course, for the dollar, rather.
It's an additional inflow into the market. But what I'm trying to say is that if you compare the liquidity, the dollar liquidity supply that will be coming to the market, if you compare it to the huge demand for FX in the markets already, it's still very, very minute, and it may not be able to close the demand supply, side gap in foreign currency in the country.
Okay. Thank you so much, Omotola Abimbola, investment analyst with AfroInvest. They're talking about the decision of the Central Bank of Nigeria to increase BDC forex sale from $30,000 to $50,000 on a weekly basis, talking about the issue of confidence in the macroeconomy, that the value of the naira may not be revived yet until other issues are taken care of, not just for the forex market, but for the entire economy. He also mentioned that we need to perhaps return to the issue to autonomous capital inflow, that we need to ensure that capital inflow continues in the economy, and perhaps that's why the central bank had to raise its MPR to 14% in the last Monetary Policy Committee meeting. We'll keep our eyes on this and see how that affects how much the Naira will be trading for the rest of the week against other foreign currencies.